Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here, Tom.
All right, great topic today. One of the big earnings events this week, and that's Nike. Just looking at maybe some of the results out of Foot Locker, they guided lower. That kind of hurt the stock yesterday. A couple upgrades today for that one. They said that the relationship with Nike is holding firm, even though Nike goes more direct to consumer. What kind of data are you guys seeing out of LikeFolio on this one ahead of earnings?
Yeah, I think that, Foot Locker is a good bellwether into Nike since so many of their sales come from Nike. But you're right, direct-to-consumer is a really big push for Nike. It makes sense. They get higher profit margins, and they can just go right around Foot Locker that way. And, of course, it's going to produce more repeat customers. When we look at direct-to-consumer, one of the things that we look at is actually web visits. How many people are going to Nike.com? How does that compare on a year-over-year basis? There was a nice little bump lately, and we're now seeing it at about plus 15% on a year-over-year basis, which actually last quarter they said that their direct-to-consumer sales were at plus 16%. So, these numbers track. They make sense for us. I think that direct-to-consumer is doing well for them. What's not doing as well, though, is their just general purchase intent. When you compare, you can actually see where it's coming from. So we're seeing a drop in purchase intent. Jordan and Nike brands are actually kind of holding their own, but Converse is really falling off. And so, inside the company, you can see where the weakness is. It's clearly Converse. They're not the big one, right? They're the one that if you had to pick one, if you're a Nike investor or you're executive, if you had to pick one to fall off, it would be Converse. But still, you don't want any of them, and you want them to be going up. And one of the things that we look at is we can see that the consumer discretionary spending is being weighed on. It's inflation rates. Inflation and rates are coming, pulling down on that. We're seeing that the holiday purchase intent is actually off on a year-over-year basis. So they actually have some pretty interesting quarters. They actually go from December 1st to the end of February. So December, January, and February is the quarter that they're reporting right now. So they kind of split up the holiday season into the previous quarter that's already reported and the one that's about to be reported. So you got Black Friday on one side of that line and then Christmas on the other side. But we're seeing a pretty strong purchase intent is off on a year-over-year basis for the current quarter that's being reported, but for the quarter that's underway, which is March, only 20 days into it or 21 days into it, it's up. So I think that if they talk about guidance, it'll be strong. But I think if they, what investors are really going to want to know is how is this quarter that you're reporting on going? And I think that everything we're seeing is that it's down fairly significantly on a purchase intent basis. When we compare it to some of their peers, Nike, Adidas, even throw in Crocs and some of those others, you can kind of see that they're all clustered together. You've got one way out there on the top right on running shoes or on Cloud, which they just reported this morning, and they crushed it. Their stock's up about 27%. We were very bullish on that one going into it. But so Nike is kind of at the top as far as happiness goes with these other competitors. Kind of hanging out in the middle when it comes to purchase intent. If you take on Cloud out of the equation, because they are sort of an outlier here. But overall, just don't love this report. I think that we're a little bit bearish going into it. I think the direct-to-consumer stuff is probably priced in a little bit. As I mentioned, they nailed it last quarter. Like, our numbers lined up exactly with what they did last quarter. So I think that probably investors see that coming, but I don't think that they're going to be, very receptive to any kind of purchase intent decline or revenue decline, which is what we're seeing coming.
Landon, I think your fears are real about Nike's earnings. Their earnings per share is supposed to be down 37% is what they're looking for this quarter. But let's go to your tables, because I think that's where this conversation gets interesting. On holding, I think what they call it, or on, or whatever it is. Its call letters are ON, like you have up there. You're right, the stock is up big today on their earnings. Are they a real threat to Nike? Because on your purchase intent versus sentiment, it's a pinhole the size of the company. Not a very big company. Are they a threat? And why are you beating us over the head with Crocs in a gym shoe ad? Under Armour gets no love at all. You're putting Crocs up here. I mean, come on. I understand Andy loves Crocs, so you probably got to put it on to make brother happy. But come on, dude.
I think that's a fair point, and I think you nailed it. I'm not going to get into any Andy Crocs conspiracy theories.
Yes.
Yeah, you kind of read our mind there. But yeah, I think that when you look at On Holdings, On Cloud, top right there, no, they are very, very tiny. I think that they have to be getting the attention of Nike, even though they're very small. They've got some pretty cool stuff when it comes to they've got a shoe subscription service where you can get new shoes every 6 months sent to you because they're very comfortable, but they wear out quickly because they're so soft and comfortable. They know that, and they stay ahead of that with that subscription service. It's kind of like a feature, not a bug type thing. But I don't think that right now they're much of a threat. I think that over time they will be, and they could be an acquisition target for Nike if things go really well. But I think really the user or the investor is going to be focused on how well did Nike do. Okay, we understand that On Cloud On Holdings, is up really big today, but are they really that big of a threat? Probably not this quarter, but in the future maybe. But how is Nike doing on its own? They're going around Foot Locker. They're going straight to the consumer. They've got pretty good sales as far as pretty good consumer happiness. But we saw last quarter that they're even though they beat on earnings and revenue, their margins were squeezed by higher costs. Their inventory was up significantly, which led to more markdowns, which again squeezes margins. So I think they're just getting in a little bit of a tighter spot because the consumer discretionary spending is going down, and a lot of people, from what we've seen data-wise, they're just not buying Nike like they were a year ago.
Yeah, they had that big slowdown overseas in China. I know you guys don't cover a lot of data that comes out of there. I think that's going to be key. It's about 17% of their sales that come out of China. But Landon, I was looking at the first chart that you had, the Nike.com global web visits. And of course, we've seen a pullback post the holidays and such. But when you look at that and maybe consumers not wanting to spend $150, $250 on a pair of Nikes, is that the headwind that you have to look at because they're so focused on direct-to-consumer that you really have to follow their web traffic at this point?
Yeah, I think web traffic is a big one because their shift. I think a big future for this company is the direct to consumer. They're going to be going around Foot Locker. I think it's a tough time to be an investor in Foot Locker. You got to be scratching your head thinking, all right, how can we get another brand in here? Nike drives everything. So I do think that web visits are very important, plus 15% on a year-over-year basis. You can see it's very strong as far as the holiday season went, stronger than last year. But again, last quarter they had a plus 16% in direct-to-consumer sales. And that's right in line with what we saw. So I think that you're probably going to see that again, which may give some relief to the investors on this earnings call. I think that overall the purchase intent is showing that they're going to come down a little bit on revenue. So it's just a matter of what's important to investors. Is it overall revenue or is it the direct to consumer, which is going to have the higher margins? So it's a tough call. I'll tell you right now, in our household, I wouldn't be bearish on Nike at all. My son just had his birthday, and I feel like everything was Jordan this or Nike that. So personally, I'm bullish on the company, but the data says otherwise.
Yeah, my son was home for spring break. He brings 3 pairs of sneakers home. They're all Nikes, just different colors. I'm like, dude, what is going on? So the kids are still buying this stuff.
Just give me the card, Dad. That's his answer.
And those are only half of what he has.
Give me the card.
Cool. But if you had an earnings score on this one going into it?
Yeah, we do have an earnings score. We're at negative 57, so we're firmly in the bearish camp. Just for comparison, on ON, we were plus 37, so we were bullish going into that one, but we're more bearish on Nike than we were bullish on Cloud Holdings. So yeah, just to give a little perspective. Yeah,
big report coming out here today. Stock did pop about 11% on earnings last quarter, but getting far above those levels from that report. All right, good stuff as always, Landon. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down Nike data for us. I didn't